So I normally make this video at the end of the week, but I had some good trades that I wanted to talk about today. So I opened SPY put spread on Wednesday and on Friday of last week. I was able to close them today because of the crazy run up that the SPY opened at. So I was able to close it for 13 cents and 22 cents respectively. They were both open at 56 cents at 2 contracts. So that's a gross profit of 154 US. And what's special about this trade is I actually saved on commissions by combining both put spreads. So I closed them together in one trade. As you can see, this line here, it says custom. I've got the August 28 put spread and I've got the August 26 put spread. And I closed them together for 35 cents. So you can see one was open August 21st. The August 28 put spread was open August 21st. And the other one was opened August 19. And I was able to close it on August 24th. And I opened today my regular SPY put spread that I open every Monday, Wednesday, Friday. So today for August 31st, which is next Monday, I had to go to 337 short strike on the put side. So it's kind of scary because that's pretty high, but that's the short put right now, given that the SPY is at 342. I collected 58 cents, and as you can see, it's already showing a small profit. So I opened it today for 58 cents, and I can close it for about 51 cents. So it's already showing a small profit because the SPY ran up to 342.75. But so the way I combined both put spreads is basically I simply clicked on create order for one of them. It gives me this entry for one of them, and I basically went in and added the other one by simply clicking add put over here and made sure that I was adding the exact put options that was part of the other put spread. So if I sold one, I make sure to buy the one that I sold. And then once I do that, after I click on send order, I make sure that it says buy to close, sell to close. So that's how I confirm that I'm actually closing my existing put spreads. I do it in one trade, and therefore I save in commission. Or basically I save on that flat fee of $5 because Questrade for active trader pricing, it's $5 plus 75 cents a commission, 75 cents a contract. So the 75 cents a contract doesn't change by combining trades, but that initial $5 fee that opens a trade is the one that I get to save on because I get to dilute it amongst several contracts. So it's not that bad. All right, so the other trade I made today, obviously Apple with the run up, I have to sell calls on it. IV is high on Apple as well. So today it opened pretty high. I caught in at around 509. I missed out when it was trading at almost 515. I wasn't able to sell calls. My goal was to sell calls at the highest strike possible for decent premiums. But so I missed out at the open. It came back down, and then when it came back up again, I was able to catch the 660 call. So if I go to account, orders executed, and then filter on Apple, you can see the 660 call over here. I did 2 contracts. I sold it for 57 cents. So that's $114 that came into my account, and I closed it right before the close at 3:55 p.m. I closed it for 22 cents. The profit percentage was too high to ignore. I mean, it's more than 50% in the same day. Doesn't make sense to wait till Friday just for an extra 22 cents. So I closed it. If Apple runs up again, maybe I'll sell again. Maybe I'll even sell at a lower strike, I guess, tomorrow. But I didn't feel like holding on till Friday for only 22 cents. So I made a profit of the difference here times the number of contracts. So if I go to my spreadsheet, so it's a $70 gross profit. So all this is gross. I have to remove commissions. Apple has the stock split on Friday, but after the close. So it shouldn't affect the price on Friday, unless a lot of people come in on Friday to buy. But maybe that explains why there's high volatility on Apple. So to sell a naked call with Questrade, pretty simple. I look up the stock under option. I stay at calls and puts. I click on calls. I pick the expiry, August 28th. I click on all strikes here and wait till it loads, and then I was going to the furthest strike possible. So 700, I'm only collecting 11 cents, so not worth it. So I was at 660 for 57 cents. In fact, it was actually trading at 75 cents, the high of the day. I got in at 57, so I didn't get the best price, but whatever. But what I could do tomorrow is maybe come closer, maybe go at a 640 strike, or even 630, or even 600. But it depends on the capital required for the trade. So you can see the 600 strike gives me 72 cents, but it depends on the capital required. So my capital required was about $2,500 per contract. So it was about $5,000 for the 2 contracts that I did. And if I look at the 600 strike, let's see what the capital required is for that. So it's showing me a capital required of $4,600 for just 1 contract. So that's pretty high. Plus, this is based on Friday's close. So the real capital requirement, I should go about 6 points lower just to see what the real capital requirement is. So if I click on the 590 strike, the real capital requirement is about 5,600. So it's pretty high for just one contract, but I mean, it is good premiums. But we'll see what happens tomorrow. Hopefully Apple runs up tomorrow and then premiums go up again, and maybe I can sell the same strike as far as possible. So now I have to look for more trades for the rest of the week because I only have my SPY put spread on right now. So Best Buy has earnings tomorrow before the open. I wanted to sell a call on it, a naked call, but I chickened out because who knows how hard it could open. I was even thinking of selling a straddle. So if we look at the straddle, I think it was trading for $8. So yeah, you could see the 117 or the 118 strike is around $8. So we'll see what it opens at tomorrow. But I could have also just sold a call at the highest strike possible. I was looking at the 135 strike to collect decent premium. So I could have sold the 135 and collect 30 cents. Actually, that's not enough. So one of them was giving me $1. I think it was the 130. It looks like it dropped. I think the 130 strike this morning was trading for $1. Actually, let's see. So the call today, the high of the day was 372. It opened at $1.67. That's interesting. And the low of the day is 50 cents. So it was actually trading pretty high, this call option today. Yeah, that's weird. That's pretty high. 273 just for the call option. No, I think that has to be a mistake. That's way too high. And also towards the end of the day. So there's no reason for the call option to be trading that high. What makes more sense, it was trading at around $1.44. The highest of the day was $1.44 and it closed right now at around 55 cents. I don't know where this 273 came from. It doesn't make sense. So if we look at stocks with high IV today, so over 10 billion, let's say IV rank over 70 and open interest over 70% as well, just to make sure volume is good enough. And so we've got silver, we've got Adobe, we've got DocuSign, Baba, and we've got gold. So these are some stocks with high IV. Let's remove the open interest and we'll get more choices this way. We've got Apple, we've got silver, we've got DocuSign, Baba, Tesla, but I'm not touching Tesla. Took a big drop today. We've got Amazon. So I'll look for a trade, maybe Ulta or Lululemon. Most likely Ulta Beauty has earnings August 27th, so I'll try to do something on Ulta. Just not sure what yet, if it's going to be a naked call. Probably not a naked put. It's either going to be a naked call or a put spread or a straddle. Alright, so if you have any questions, leave in the comment section below. And like always, if you can open an account with Questrade to trade on the stock market, use my referral link in the description below to get $50 in free trades. If you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.